Tesla set to roll out their robotaxis this weekend, and our next guest today says a successful launch is essential for Tesla to validate the company's long-term pivot toward autonomous mobility. For more, let's welcome in now Stephen Gengaro, Stifel NextGen Transport analyst. Stephen, it is good to see you. So Tesla's robotaxi service rolling out this weekend there in Texas, Stephen. What do you expect to see and hear, and how excited should investors be for this moment?
Yeah, hi, Josh, and thanks for having me again. So when we think about Tesla in general, right, the robotaxi initiative and the full self-driving initiative are critical long-term value drivers of the company. And we've talked a lot about that in research notes. When we think about this weekend, I mean, we think this is going to be a slow process, right? This morning, you already had some senators and some folks, I think, that were local representatives down in Texas wanting to sort of delay the launch till more safety can be checked. But this is going to be a slow process. You're probably going to see, expected to see 10 or 20 vehicles on the road, Model Ys, that are being very closely monitored by Tesla. So this is, a very slow process, but it is obviously, the first step in something which can be much, much larger over time.
And in terms of how it expands from here, Stephen, here was Dan Ives, or Wedbush, we know Dan, bull of bulls on Tesla, told his clients that he said, while the Austin launch will start off small with roughly 20 Model Y vehicles, he says, it's our view Tesla will launch and scale its robotaxi service to roughly 25 cities in the U.S. over the next year. What do you make of that?
Well, I think the first thing that we have to think about, Josh, is safety, right? And I think one of the risks to the launch is obviously the safety of the autonomous driving system. And if I get in an accident on the way to work on Monday, nobody's going to know or care. If a robotaxi bumps into a fire hydrant, it's going to be in every news feed probably in the world, right? So there has to be a really careful focus on safety. So when we think about the next steps from here, I do think you're going to see it roll out over the next 2 to 3 quarters in multiple cities in the U.S. I think it's going to be measured. I think it's going to be a slow process. I mean, when we think about the importance of it to Tesla, I don't care that much if it's in 3 cities or 5 cities or 7 cities by December 31st. What I care is that there's a clean launch, it goes smoothly, and the safety record is extremely high. And I think Tesla understands that. So while we do build in these significant long-term upside potentials for the company, and the robotaxi initiative is obviously a big part of our valuation, I think the near term, the focus on safety is more important than how many vehicles are actually out there.
Waymo, we know right now, Stephen, far ahead. What are Tesla's competitive advantages in this space? When you explain them to clients, what do you tell them?
Yeah, it's interesting. I've been in Waymos and full self-driving Teslas, and the first thing that jumped out to me was that the Tesla system felt more natural, right, in the process. Now, when you look at the Waymo system, and this is on the vehicles you see in San Francisco and other cities, or sounds like they're coming to New York at some point in the not too distant future. They have multiple redundancies in the system, right? They have cameras, they have LiDAR, they have radar, and they because of those redundancies, I think people look at them and say there's a higher level of safety. When you look at the Tesla system, it's camera-based and it's AI-based, and they have massive quantities of data to do the analysis. To me, the vehicles kind of felt a little more natural. But what we tell people is, the lack of redundancies, the camera-based system only, there are some risks to that. Now, on the positive side, there's really 3 big benefits, right? One is cost, right? If you're talking about a robotaxi, which you're showing on the screen right now, or whether you're talking about a Model Y that I subscribe to FSD with, the car could be $30,000 or $40,000. A Waymo, fully equipped with all the sensors, et cetera, is well north of $100,000. So cost is one. Second is, I think, clearly the massive fleet of Teslas that are out there right now, which can become part of a robotaxi fleet over time. So if I have a Tesla Model Y in the driveway and I have full self-driving, theoretically I could drive that car to work and dump it into robotaxi fleet. So the ability to scale based on the massive installed base is probably the second big positive. And then the third is their ability, I think, to have some flexibility, whether it's some Tesla-owned assets owned by individuals, and even partnering with at some point, or even using me having a Tesla and dumping it into an Uber or a Lyft fleet if I so choose. So there's multiple avenues for the company over time.
And finally, Stephen, like next events for Tesla investors, they have marked on their calendar. You got Q2 deliveries, Q2 results. I know you're a fan of this name. You got to buy. What are you expecting to hear, Stephen?
Yeah, I think one of the things that's honestly hard, Josh, is we get a lot of data points on sales, right? We hear Europe's a problem. We hear there's some pockets of Europe which are pretty strong. The Model Y rollout, the new generation of the Model Y, which was rolling out through the first quarter, clearly was a headwind on 1Q numbers. We do expect to see a pretty solid sequential increase in the second quarter. The macro environment remains a little bit uncertain, but we do expect to see momentum in sales, and obviously we do expect to see some traction on the FSD side. I think those two data points, ultimately should be positive catalysts for the stock as the year evolves.
Stephen, always great to see you and to have you on the show. Thank you, sir.
Thank you. Have a nice weekend.
You too.